There you go. You gotta have a phone plug somewhere. This guy will plug in. Let me try this charger. No, it's not even my charger. Yeah. Whatever. Phone's dead. What's up, everybody? Struck? What's shaking?
Market share continuing lower here. Data saying August 2025 total platform assets at the end of August were 304 billion, up 2% from end of July and up 112% year over year. Shares are lower now.
What's up, everybody? Did I post? Hold on a second. My phone's dead. I can't function. The funny thing is I got 3 phones, and all 3 of them are dead. Hold on a second. This one should. All right, let me mute a couple things here.
Take a look at the macro. The relatively low inflation reading combined with.
All right, and I'll keep it short and sweet because I know a lot of people too watch it on recording, but I'll get to the more important stuff early on here. There's no reason to keep you guys too long. We got a big week next week. A lot of action going on. We'll talk about that. Is it 4:15? Oh yeah, all right, we're ready to go then. All right, so you got a couple earnings out that I just took a look at right before we got on. RH is one of them. RH is a little interesting because it kind of goes into that rate cut bucket. You know, should benefit from rate cuts. Tied to the housing market. And it just usually moves with the rate cut names. You got what's the other one? We always talk about Wayfair, right? Which has been much better. Has been a much better play, Wayfair. But you had a revenue miss here on R8. Again, I didn't look at the numbers, so I don't know if they cooked the books or whatever. But if it's just a revenue miss, I think they buy the weakness. So we'll take a look at that. Possibly as a bounce play mañana. And then Adobe, I saw was up decent, right? Yeah. Now this thing's been a disaster, So any news not as bad as expected, you were going to get some sort of pop, and you got a little bit of a pop here, the 362. It looks like this has been a tough name, I know a couple of software guys in the Steam room who know the sector say they got headaches. They got some stuff they got to deal with. It's tough to get through right now, but I always know Adobe as a stud name. It's been a hot growth name for a long time. This is about as bad as I've seen it for a lengthy stretch. Let's see. Yeah, look at this. So, some of these software names are having a tough time. So those are the earnings out today. Strong day in the market. And if you guys remember, because let's dive into it quickly here. If you guys remember what we talked about last week, I think more so last week than any other week, because we started to notice kind of a sea change in the market. We started to notice something different than what we've been seeing over the last couple of years now. And that's been when the crowded large cap names lead, right? So when you got the mega cap, the large cap AI names, the popular names everybody knows and owns by now, when they're the ones kind of tugging the indexes higher, okay, we see cautionary signs in the market, right? A lot of the things we look at, from some of the credit signals, volatility signals, take yesterday, for example, right? And take the last few days. You had names like Oracle and some big, market cap names just go bananas. And, the equal weight S&P 500, you look at the breadth, the daily breadth, AD, right? Stuff like that. You really didn't have a lot of participation while the indexes were being pushed higher. If you remember yesterday, you had a nice rip off the open, and we kind of faded, right? We gave it all back, hung on to some green, but I think the Dow was down like 400 yesterday. So while it looked bullish, internally, it just, again, didn't have a healthy look. And that's something we've noticed, especially of recent here, a lot more often. Okay, because again, one of the pillars of this bull market, going back to when the 2022 bear market came to an end, was that the mega cap names, right, the Mag 7 of the world, they've been the ones that have been carrying this market. And you hear from every perma bear out there, or every non-believer in the rally, that it's not a good thing, right? Thin participation. It's the upside's made up of 4 or 5 names, and that's it. Okay. And all this has been true, right? A big portion of the rally coming out of the 2022 bear market has been led by a lot of those type names. Okay. What we've been seeing recently is that when we see that type of price action, it's almost like the market kind of gets, I don't know if I should say nervous, but protective, right? You got some money for example, while the market was up yesterday, you had some money putting on protection, right? You had things like VVIX up big yesterday in a market that wasn't even down, okay? While the market was up big. So, but when we get days like today, when things like we've talked about recently, you get more of the underbelly, right? Think of it, as simple as everything else in the market that's been neglected, okay? From, housing related names, rate sensitive, right? Things that'll benefit from rate cuts, small caps, mid caps. When anything outside of those mega cap, large AI names, tech names, lead, the market looks a lot healthier, okay? So today, you get obviously off a CPI that was in line, and that's obviously bullish, okay? But coming off that data, you had that type of leadership right from the get-go, and today you saw a healthier looking rally, right? A sustainable looking rally. Rally didn't fade today. Didn't even come close to fading today. You had stuff like VVIX down today, right? Where it was up big yesterday. So we continue to see that. And again, it's not as easy as it sounds, okay, to try to trade it or hold through it, but it really is right now. Something I'm focused on, where if we can continue to get more action like today, okay, I think we still can push higher and avoid some type of major correction. Okay. If we can't, right, that's where I think a correction will show up a lot sooner than it would if we were getting leadership from those other places. Now, here's the problem, right? On its face, like, a lot of us have been positioned for that to continue, right? You guys all know, a lot of us in the Steam Room have been small cap fans for a bit now. Still exposure there, playing in individual names, in the TNA, the IWM. But even though we've been positioned there because of how the rest of positioning shakes out, and we'll look at that in a second, a lot of the day-to-day price action and momentum is going to hinder on macro data and what the Fed may do. You understand? Like, for example, if the CPI, I don't know, again, if it came in hotter today, right, you may get more of the same that we were seeing yesterday, and that would be bearish, right? We would see a lot of warning signals show up today, okay? Or if you get like the economic data really start to roll over and deteriorate, and the street is concerned about the Fed being behind the curve too late, as Trump likes to call Powell. The small caps would likely sell off in that environment. Okay, so again, that wouldn't be healthy price action. So a lot of it's going to hinder on the macro data one and what the Fed does and says next week. So that's kind of the problem with, how should I say, trying to predict what the future may look like. Okay, right? Because again, I think it's important. I mean, it's important enough to where I think we can avoid a correction right now and probably push it to towards the end of the year, or we may need to go through a little something a lot earlier because of the unhealthiness, right? So that's kind of, again, the market is interpreting, in my opinion, the market is interpreting this information the same way. And it's been interesting to see that change in dynamic, again, which we talked about the last couple of weeks, right? Again, me personally, and it's a little bit different because you have a lot of things that have run a lot, right? And I'm sure we'll talk about it. We all probably think we're pulled through the drones out there right now, but I still feel more comfortable in that other bucket, right? Because of how positioning shakes out, I still feel a lot more comfortable in the non-crowded type names and pockets. But being said that they have had a decent run here, okay? But I'll tell you what I'm doing, right? And again, there was a little confusion by some people. I get it, kind of my game plan and how I'm approaching it. But I hope it makes sense. It may not make sense to all of you because each and every one of us are trading a different account, a different book, a different type, different size, different time frames. You understand? But all I can do is share my actionable approach to what I'm saying, and you guys take that information and do what you feel. All right. So if you guys recall what I mentioned last week, kind of a new approach that I've been taking recently is a lot of the older stuff. Okay, a lot of the stuff I've been holding on to and giving time, because again, one of the things, my approach early on in this rally was not to be too clever, not to be too cute. I didn't want to be too tactical because that's where I can F things up, right? Knowing that I had a decent tailwind and some support at my back because of how bearish everybody was, I wanted to do more sitting than action. Does that make sense, right? I wanted to give a longer leash to things, being that I felt we had some runway and I'm more inclined to buy dips, okay? Where now that has changed some to where I'm lightening up on a lot of the stuff that I've been holding on to. So anything that I've been buying off old flow that has impressed me and I've been hanging on to, I'm doing my best there to lighten up as much as I possibly can. Okay? Again, I don't feel I need to rush to do it, but this is something we've been talking about over the last 2 weeks, actually. So it's something I like to do, especially into strength. Okay? But at the same time, while I'm taking my risk down overall because things have moved to the upside and appreciated, if there's something that sweepers come in and go bananas in, okay, and it's a new name, right? It's not a repeat name like we say. I want to be a part of it, okay? I may be more tactical in my time frame and holding whatever that new name may be, but if sweepers are coming in and there's still an appetite and they're bombing new names, I want to be a part of that. What I don't want to be a part of is older names that are still catching action and I continue to hold them. Forget about buying them because that's completely off my list. But I continue to hold or even entertain the thought of buying any older names that are still catching flow. Make sense? Okay. So like, again, a new name, which most of you know by now, like a GoPro, right? I'm in GoPro. That's kind of my little baby right now. A name that sweepers have come in tattooed. They tattooed April calls. And, a couple months ago, I probably give this thing to year end, right? Knowing that we had a market tailwind and we probably got a decent way to go before things get rocky. Now, I'm still in it and I'm proud of myself for still being in it. The God honest truth. Okay? I'm proud of myself for still hanging in there, right? I got a cost, I think 130 something, a little less than 140, and this thing's over $2. I got a nice chunk of it. I thought I'd possibly be out of it, but they came back and hit it pretty hard. So I'm trying to stay in it. But everything else that I kind of been playing here, I'm at least selling some into strength rather quickly. So I'm being a lot more tactical. Okay? So in a nutshell, that's been my complete approach. While I'm taking my risk levels down as a whole, I'm taking risk off the table, I'm cashing in chips, and I'm raising cash gradually, in a sense, but that's a goal of mine right now. Okay? But I'm willing to put some of that money back to work in any action and new stuff that I'm impressed by. Okay? So why am I taking that approach? And I understand, right? Most people, and not those of you in the Steam Room per se, but a lot of people probably on this webinar or who listen casually, they don't like that in between, right? It's either aggressively bullish or short the living shit out of everything. There's no in between, right? They don't want to hear in between. Are you bullish? That means you're still buying everything like an idiot, right? Or are you bearish? That means you got to short everything. And those of you who know me know, the majority of time that I spent is in between, right? Very rarely on the extremes, only at extremes, okay? The big thing, and you guys could use like as an example, earlier in the year, okay, coming into 2025, let's call it even early February, I was a lot more cautious than I've been here recently, right? Than I still am. And I kind of showed you guys the reason for that, right? There are still things that are missing here that I think are still chips that can fall over in the Bulls camp that can keep this thing going, right? At least even the parts that we're looking at. Okay, so let's look at some of those things quickly. Again, this is not new. We've been talking about this on this webinar probably the last 2 weeks, or at least a week, but members, you probably have seen it a lot more often than that, okay? This is one of the main things why, okay? I think this is positioning in a nutshell. This tells you everything you need to know, okay? The two camps as far as positioning out there. You have systematic equity positioning, which are CTAs, vol control funds, right? All systematic approach, no emotion involved, levels, macro signs, VIX levels, all that sort of thing. No thought process in a sense, okay? Their goal is to try to catch these major trends, get aggressively long or short, and try to catch these major trends. They've been, and that's that blue line you're seeing on here, okay? They've been, call it, quote unquote, all in now for a few weeks, okay? In other words, they had a full tank for the most part of long exposure as they're going to get, okay? And they've been sitting like that for a couple weeks now. So, and like we talked about, even in the past several weeks, but even those of you who've been on this webinar over the past few years, right? Just because they get to max long doesn't mean the market falls apart at the seams immediately just because they got to a max long state, okay? That's where they make the money. They get aggressively long and they sit long to catch those trends. And that's where these funds pick up all the money. Otherwise, they'd be out of business if every time they got max long, the market fell apart. All right. What needs to happen is the momentum needs to shift and the selling needs to pick up and break some levels to the downside for them to start selling, right? We talked about this. So kind of for an example, again, I don't know an updated level going in now with today's rally and all, but kind of like 6,200 on, I think it was ES, was kind of a big level for a lot of these systematic funds. As long as we're above that 6,200, there's not going to be any aggressive selling out of this camp. Okay? No matter how bearish you may think it is, they're systematic. They're not thinking about it, right? They're not putting any emotion or thought behind it. Okay? So you get it there, right? While they're max long, okay, and as long as they're going to get, you have discretionary fund positioning. Think of fund managers like you and I, right? Like human beings who have a thought process, a thesis, emotion involved. Things may look bullish, but that doesn't mean they're buying, right? They can change their mind. Those are that type of positioning. And that's that green line, right? And we've talked about this crowd for a while now. They have yet to really have any conviction on the long side of this market. They haven't become believers in this rally. Okay? Now, you could see earlier in the year, okay, this was one of the few things that where you had both of them, both discretionary and systematic funds aggressively long going into that February-March period, right? One of many things that we've talked about several times on this webinar of a reason why we should be concerned, okay? Here, you don't have that yet, okay? So while there is the risk of some exogenous event, and we just saw somebody get shot in the neck yesterday. So in this crazy world, you can't rule that out ever, right? But while there is the risk of some sort of event happening and we gap down and crack through levels and systematic funds need to sell, okay? Where the rest of positioning currently sits, right? They are likely to buy that pullback, right? Because they're not as long. They don't have as much long to sell into that pullback. They're barely long, if any long. Okay? So that's why, like, now, barring an exogenous event, these pullbacks, these dips likely remain shallow. And you see dip buyers continue to utilize those dips to put exposure on. Okay? Now, again, we continue to do what we're doing right now. And it doesn't even have to be a rip-roaring rally. It could be just grindy, choppy higher, not bearish, and you start getting this discretionary crowd to give in, right? Maybe rate cuts. Now they decide to get long, right? Maybe small caps break out. Now they decide to get long. Right? You certainly can see that happening. If we see them join the party, that's when kind of now we got a lot more concern than when we had. Right? And at that point, right, and I'm going to show you something else that is a big, that's going to play a big part in whether I start to get aggressive in raising cash. And not only aggressive in raising cash, the most important thing is I don't want to add any new risk at all. Honestly, at this point in my career, and I'm old in market years, I don't get it. I don't get that FOMO anymore, especially when signals are telling me to do something else. You understand? I'm not trading client money. I'm trading my own. I don't have to answer to anyone. So it's not a matter of the price action. The market can continue higher. But if I'm at a point where I see both ends, both major pillars of positioning now, all in, and then I'll show you the next chart here, which you guys know plays a big part in what I look at. This is positioning in the futures market, right? And we refer to as, the commercial hedges as Sharpies, okay? Earlier in the year, when we were a lot more concerned about a deeper correction at play. And not to say that the correction in April was a disaster, but I was worried about even being worse than what we had, to be dead honest with you. That's why I was so cautious, okay? But earlier in the year, you could see Sharpies, commercial hedgers, we call them Sharpies, that's that red line, were aggressively hedged in equity index futures, right? You can see that red line below the zero and aggressive hedge position, okay? That was literally as the market is continuing to push highs earlier in the year, okay? Now you look to where they are now, and even though they're not aggressively long, which is rare for them, they are still long as a whole in equity index futures, right? So that's a big difference, right? For a crowd that at least I look at as kind of the smart money out there, right? They're known to be early when it comes to hedging, right? It's something they strive to do. They want to be early, okay? Net, when you take their positioning in all of equity indexes, they are not even hedged yet. And you would ask, why is that the case? Well, you look at that green line, and that's large speculators, aka hedge funds, and as a whole, they are still net short equity index futures, right? So it's hard to make the comparison to earlier in the year just based off positioning on its face. Right? Not a catalyst, not anything like that. Just based off how players are positioned, that we are in the same shape that we were coming into 2025, right, in February. Right? There's still a decent difference out there. Now, why is this the case, right? If you dig a little deeper, because this is all the stock index complex, all the equity indexes in one. You guys know, kind of been my baby trade has been the Russell, and that's been a big part of it. Everybody and their mothers, uncles, brothers, sisters, uncles, grandfather has been short small caps, right? We talked about this. Even bulls were shorting small caps as they were buying more mega caps. They were shorting small caps to hedge their book. Even the bulls. Okay? That's all fine and dandy. Okay, but once everybody's doing the same thing and on the same side of the boat, you get an extreme like we had here. And the extreme was Sharpies getting aggressively long, commercial hedgers getting aggressively long in Russell 2000 futures, and hedge funds aggressively short. Okay, and now what we've been seeing behind this kind of this IWM outperformance, you've been seeing the unwind. Right? They're getting squeezed. And we get another update tomorrow, but there's still some more squeeze to go. All right. So again, what this means for large mega cap NASDAQ names, I don't know. But that's not I'm not playing those. I'm not focusing on those. Like today, they were down, right? They were down while the rest of the market was ripping today. But, as much as I like to point that out and be like, see, small caps up, but some mega caps were down today. Look at some of the moves on some of the other ones, like Oracle, and you got a name like TSM breaking out. There's still some decent strength there. A lot more selective, but there's still decent moves there. All right. I just don't feel comfortable there. I think it's hard money in that arena now. A lot of the easy money has been made there. Obviously. Okay. So these are kind of the things right now that I'm solely focused on, right? Again, I don't want to be stupid about things, right? Even though from what we look at today, it looks like we still have more to go, at least in certain pockets of the market. I'm not just going to buy everything and hold on to everything as much as I would have been right to do so up till now. But you could get any little pullback, and that's where I think that's a perfect segue to where I think we're at right now, right? Like, I think right now, if positioning stays the same, okay, there's no drastic change in positioning as of this week, and there shouldn't be, okay? We're going into a big week next week. We certainly could see a little pullback in the market, right? Or more of kind of this rotating type market that we've been seeing. A week, the mega caps do well, and the small caps fell off a bit, right? The following couple of days, the small caps lead, and then the mega caps sell off a bit, right? And even certain names within that couldn't diverge, right? So we certainly could get a lot sloppier action. So that's why I don't want to be as sloppy as I've been for a lot of this rally. I want to be more selective, okay, in my any new buying. And at the same time, I want to start locking in gains. Because the other thing I don't want to do, guys, I don't want to wait to the last minute, right? And then when everything is there, all of a sudden start pulling the plug on everything I own, right? Like a chicken with a head cut off. So it's kind of, I feel better if I have time. Right? I appreciate that. Fine, the market wants to push higher. I don't get I'm not a little kid anymore where I feel like, oh, if I put on more risk or I held everything, I'd be up so-and-so. I can't look at the game that way anymore. You understand? When I was a lot younger and a lot dumber, I could look at the game that way. Now my main goal, like I tell you guys all the time, right now, no matter what at this point, is to hold on to the bulk of what I made in this rally. Okay? Because let's be honest here. Let's be totally honest. And I don't want to hurt anybody's feelings, okay? Because this is nothing personal to anybody, okay? But let's be totally honest with ourselves right now. Over the last, at least 1 to 2 months, and I was talking about this with Joe and Smitty on the podcast yesterday. It's been really, really hard, really difficult to lose money on the long side, right? It really, really difficult. And not just for me, right? I'm talking about for every single one of you, right? The only people who kind of lost money over the last couple of months, if they were kind of concentrated in a name that just happened to shit the bed for whatever reason, right? Healthcare was a tough sector. Smitty talked about. UNH kind of went south early on, even though that's come back. So kind of caught a bad break. So it's certainly possible. But the only other people who possibly lost money in names, if you played enough of them over the last couple of months, are just if you got too cute, right? And you're trying to flip everything, even there, I don't think you could have lost money. It's been insane. So my number one priority right now is to make sure that all the good time we just had, even going back from the April Liberation Day lows, I want to hold on to the bulk of that money. That's my main goal. Now, am I willing to risk some of that and try to make some additional money if I think we have more time and there's opportunity? Sure, of course. But my number one goal before that, on top of that, is to hold on to the bulk of those. Because if I can't hold on to the bulk of those profits, right, and I give them all back, it was all for nothing. And I'm telling you again, from experience, that was kind of the brick wall I used to hit early on in my career. That was my main problem. So that's my number one priority, right? And that's why kind of, I utilize the strategy I'm currently using right now. But this is in a nutshell, kind of what I'm looking at here. And again, in this, what I'm sharing in the steam room. Some people maybe, it doesn't make sense to, or, they want to be more actionable. They want to feel more bullish or bearish on certain days, whatever it may be. But this is kind of my road mapping guideline to kind of keep me in check and, allow me to find the most success. Does anybody have any questions on this? By the way, before we get into anything else, I wanted to thank you everything you did. Very nice, Mr. Patrick. I remember you talking about that name too. I thought of you today when it caught that news. What a move. Well done, Patrick. Where do you get your options flow data from? I use CBOE Trade Alert. I use CBOE Trade Alert. I have other things kind of for behind the scenes, apps and stuff like that if I'm running out of the office, but my Trade Alert CBOE is on 24 hours a day. Like when I'm looking at the flow, that's the only thing I'm looking at. And I'm looking at the flow all day. Yeah, see, Patrick saying I used to track big useless block orders, and that's the thing, Patrick. That but honestly, it's no secret sauce. What you'll realize, like over time. See, like when you're in this market, Patrick, you can get away with kind of buying anything. Let's be honest, right? Like even like recently here, you can buy off block trading. Like today, I'm sure people are chasing winners off rolling. Today was all rolling activity, by the way. All rolling activity. Okay? All the action we saw today was all size rolling in all these winners. Right? You got September OPEX coming up next week. The Fed, they got started early, the end of this week here, and they're rolling everything. Okay, so I'm sure there are people out there, using scans that are buying off these size rolls, and they'll get away with it when a market's super bullish. But when the market is range bound or you're in a bear market, you're going to get your head chopped, especially trading options. So and Patrick, what I'm getting at is if your sole purpose is to make money and not entertainment purposes, action, as we say, us degenerates, we like action. You want to pick from the best type of activity, order flow that there is, right? No matter what. You have something even more so when there are less candidates to buy, not when there's a list of 25 names to buy every day, right? When you have nothing if that's the case. So, and again, I know, you are aware of that, but believe it or not, there are people who just don't, how should I say it in a nice way? There are people that don't correct those mistakes. It's all about, am I making money now? That's all a lot of players care about in this game, right? Oh, the market's ripping now, and I'm making money tailing nonsense orders, so who cares, right? So that's they just focus on the now, but eventually, they're going to have trouble finding consistency. That's what it comes down to. T, what's up, T? Are you back? Do you think that was 50 Cent who bought December and Jan VIX close yesterday? I don't know. I'm not a big VIX guy, as you know, T. It could be. I'll try to ask around some of the VIX guys that I know that follow it closer than I do, if it was 50 Cent or not, our boy 50 Cent. I just think, T, where VIX is right now, and by the way, we didn't even talk about it, okay? This is the risk, right? I should talk about this. We talked about it on the STEAMROom. Okay. Oh, hold on. I got to do this. VIX futures, right? This is the main risk right now, and I think that's why you have VIX buying. You're going to have VIX buying, even if VIX, even if you don't like VIX now. I think based off this positioning, you're going to have VIX call buyers show up. So here's kind of what we're getting at right here. So this is the main risk. And in my opinion, again, not a risk for even a major correction. I wouldn't necessarily put it in that game, and I'll show you why. What I think this is a risk of is kind of a short-term Volmageddon explosion type thing. You understand what I'm saying? So we've seen it many times where, not too long ago, I think it was last year at some point, where you get kind of this 1-2 day explosion in VIX and then it unwinds. And I think if it was to show up now, that's what I think we'd get. And the reason why is this. Okay, so this is net short positioning in VIX futures. And this is what you got here. Right? So it's starting to get extreme. Right? Now you look, like, here's the start of the bear market in 2022. It was extreme, but it kind of built up there. You see how it built up down here for a good month or two? Here, you're just getting there now. So I think if you get kind of a VIX pop, my opinion, it probably will be something short-lived. You get a pretty big move, so it's worth playing VIX as protection. But again, it doesn't have to be a correction is what I'm getting at. You know? And like, look, you look here. Okay, this kind of stretches things out. This is positioning in VIX futures. So while Sharpies aren't hedged in equities, they've been taking the other side of VIX. They're getting long VIX, right? Which they usually are. And here you see hedge funds shorting VIX. But look at some of these extremes here. Look at this. Right? Look at this. Almost doubled from where it's at now. And then you got this. That was COVID, I think, by the way, too. So, this can linger for a while. This doesn't have to light on fire now. And I think for those who are holding on to a good amount of equity exposure and they don't want to let any go, I think it makes sense to own some VIX calls out a couple months. If you're too heavy, like if you have too much equity exposure, and you're worried about even a short-term kind of rinse, I think VIX is the perfect hedge. I really do right now. Again, I think the bigger problem, T, is where this fits in is with everything else, right? If we, let's say, are in, again, it's hard to put a time on it, but let's say October or November, and now you got these VIX shorts all the way down here, right? Kind of like this here again. And on top of that, you got now Sharpies aggressively hedged in equities. And on top of that, now you got discretionary positioning, they're long. Then that's where you can see me singing a completely different tune, I promise. You're going to see me singing a completely different tune at that point. I will not be talking about any equity exposure, putting on any equity exposure, and I will be selling basically everything. And again, I don't want to sound too spooky, but that's what I did earlier in the year. Okay, and it wasn't the end of the world, but because of that, I pretty much was selling everything. Because the thing is when you get to that point, you've increased the probability of a correction up significantly. So for me, it's like, why would I want to hold anything, especially, if I'm up on it, if there's a extremely high probability of a correction over the next few weeks or month or so, right? I think you want the ammo to put to work. Kind of like we did, right? Again, I didn't get in cash the day before the market stopped going higher. The market was still grinding higher, if I remember correctly, when I was in cash. But then it was worth it because I had ammo to fire when we kind of got that correction eventually. So again, for me, it's not the price action. You understand? The price action doesn't mean a whole lot to me. God honest truth. To me, it's positioning when it comes to that stuff. If everybody's on one side of the boat, no matter what the market's doing price action wise, I couldn't care less. If everybody is aggressively long, I'm going to be the complete opposite. And whether the market continues higher over next couple of days, couple of weeks, or even couple of months is irrelevant to me. You know, it doesn't mean anything. What's going on here? Yeah, that's a good point. The world's crazy enough to buy some VIX here. Sahil's right. Sahil's right. You know, because if you think about that, that's the risk that you can't predict. You know, like again, we just saw on a college campus somebody get shot in the neck for 200 yards out. You know, if that's somebody more important or market related event, I mean, that's how quick shit happens in this crazy world. So, yeah, I think if you're too long, you don't want to kind of raise some cash, kind of like what I've been doing. I think it's a great idea to add some VIX a couple of months out. Again, just as insurance. Just as insurance. Yeah, Patrick, I can't even look at that video anymore. That's just scary, man. Scary. No matter who it is, it's just scary. So, but again, these are things. It's just hard. You can't predict it, and these things can happen at any time, right? We can't worry about it. I'm talking about in market terms now. We can't worry about it as market participants because then you'll never buy anything. But again, I think for where we're at, if you feel like that would sting too much, getting caught even in a short-term downdraft like that, VIX is the way to go. VIX is the way to go. Here's another thing. Like, again, this is not really anything huge per se, but we kind of see it in futures. This is hedge fund in individual names. Okay, so as a whole in individual names. And, look at this. Like, they really have had no interest in putting on any sort of leverage on the long side at all in equities. At all. Like, they got a little bit short, right? That got squeezed, and they're just stuck here hugging the zero line for a while. Now, this is not a necessity, but again, earlier in the year, they kind of got squeezed, and they put on some long exposure, They forced them to put on some long exposure before the market rolled over. So it doesn't have to happen, but this is just another thing, showing you that the discretionary positioning is just not there. It's just not there. What else? Anything else of importance? Honestly, guys, I don't think there's anything else. There are other things out there so that we've been talking about. Here's one in particular. I know, like Sahil, Patrick, T, we've been talking about this a lot. This, I think, bodes well even after a pullback, okay? What we're starting to see is institutional money start to step in, okay? And why is that? One, probably because the Fed is starting to cooperate. But two, you're seeing it now because the small, the mid caps, the other things are getting involved. Okay? Nobody owns these things. That's the beauty, right? We've been talking about this for a long time now. Nobody has any exposure, no real exposure in any of this stuff. All right? Like now, because of how hot some of these things have gotten, you got some speculative exposure in a lot of these things, right? You see it in a lot of small cap names, micro cap names, right? They got hot. So you got some speculative exposure, but I'm talking about big picture exposure. You got nothing in the rotation part of the market. Absolutely nothing. So this is a really good sign. This is over the past month and over the past week. And institutions are now the biggest buyer. Remember what this looked like? You basically had retail were the only buyers, right? It was retail and buyback for so long, right? Hedge funds, you can see, still no interest. But institutions, that's that money that comes in and gets aggressive in, building positions in some of these small mid-cap names. And when they do, you get some big moves in these things. You get some big moves. Because again, there's no sellers. Think about it. A lot of these names, guys, everybody who sold, who wanted out, has got out of a lot of these names. So now when you get institutional buying step in, you really don't have that supply to overpower that buying. And I think that's what we're seeing in a lot of these things. You know, I think that's what you're seeing in a lot of these things. If you're looking for Maple, you're doing really good this year. Yeah. Come on. You know exactly, Sahil, right? Like, listen, you guys know I'm very superstitious. I don't like to talk my book. You know what I mean? You never hear me talk dollars and cents. I'm a very superstitious guy. But if you've been playing individual names, because again, if I'm doing well, I know you're doing well, you know? And you guys know I'm the first to admit it. Prior, right, in years past, I used to complain to you a lot. When the mega caps were the ones where all the hot money was, all the money being made was there, I was sweating and grinding it out every week, every day, every month. It wasn't an easy time at all. Because again, that's not my bag, right? I'm not buying $200-$300 stocks. Even if I'm playing them, I'm not getting aggressive and taking the risk that I like to take in the underbelly. You know, like I look at these names, like this, even this little piece of garbage. You understand? At $1.30, $1.30. You understand? Like you guys like to buy calls, okay? Now we were talking about this on the podcast yesterday. Think of this. This is kind of how I look at it. You buy calls at $1.30 premium in whatever name. Give me your favorite name that's been running. It doesn't matter, right? You buy calls for $1.30. One, they're probably going to be extremely out of the money, speculative to the gilt, right? And two, if you get a drawdown the next day, that $1.30 you paid is going to zero. That's not far-fetched. You see it all the time. Here, you got a $1.30 stock, okay? A $1.30 stock that they come in sweeping April calls like they found God, right? Like they found God, the action's catching. You know, barring the CEO coming out and getting caught cooking the books in some calamity like that, which is obviously extremely rare, what is your real risk here? You know, your risk if they cook the books is zero. Same thing like that option. But realistically, what's the higher probability risk here? The stock goes what? Back to $1.20 and sits there? Oh, maybe it gets killed. It goes to $1 and you get out? Huh? Now, you know, I'm in at $1.30. The stock is printing 210 in the aftermarket right now, liquid as the sea, trading a couple million shares a day. So, you know, when stuff like this is catching aggressive, that my type of flow, that's when I'm leaving a dent. You know what I mean? That's when I'm leaving a dent. Because, right? Think about like what can you buy? And depending. Those of you who are putting what 20, 30 grand in the position, right? You're buying what 20,000 shares? Crazy. And you know, this is one. Is there a 11 for GoPro? That classic struck. I love that. You know, they're not all $1, but think of all the names we've played, guys, over like the Heels Point since April. Think of all the names we've played under 30, 20 bucks and the moves. You guys can give me, each and every one of you can give me a list of 10 names, minimum, right? I think everybody in here has owned Irene at one point in time. This thing's 33 bucks right now. 33 bucks. Right? The biggest piece of garbage on the street that I had to buy. I had no choice because how aggressive they bought it. Riot, 17 today. Riot. You got this, all of social media are doing cartwheels as this thing went from 2 to 10. Like, and if you're smart, it shouldn't matter what it does. Like, everybody's like, oh, what do you think of open now? Who cares? Who cares? Right? If you were in this thing and you traded it from 3 to 10 or 3 to 9 or 3, who cares? Take your money, get out. You like the company long term, leave a piece, call it a day. Who's better than you? Who cares? You just had a triple in 2 weeks. You know? So, but again, you guys know this is I didn't play open, by the way, not recently here. But you guys know, like, these things are my game, you know? These things are when they're catching the quality action. That's the difference, you know? When they're catching real action, that's when I like to take a shot in these things. Bitfarts is moving. Can you believe it? Look at this. There's so many. Okay, there's so many. Like, you can't buy and hold them all. It's impossible. Like, look at this one, right? I wanted to buy this one so bad. Hive. How could I not? They were buying it every day. Every day they were buying Hive. You know? But while they were buying Hive, I had Wolf. I had Hut. Look at Hut. Right? I had Riot. What else did I have? I own this Cypher. There's so many. So many. So we get to the heel point. If it continues, right? If we're still seeing the aggressive quality action and new names like we saw in GoPro, okay, I want to still play. Hell yeah. But what I don't want to do is buy all these older ones we're looking at now here. You understand? I don't want to keep buying them just because they're going higher and we're seeing flow in them. They already hatched. Like, the only new risk I want to put on is if they're coming after new stuff. Here's another name, and again, like GoPro, they're the big money. The good looking money is in April call. So, like, there's real buying there. This is not. There hasn't been speculative buying looking for a pop or some news or some pump on X or anything like that. There's a real buyer in GoPro. A real buyer showed up. Don't ask me why. I have no idea. But a real buyer showed up in GoPro via the option market. That's what we picked up on, and that's what caught my eye. I had no intentions prior to seeing that flow of buying GoPro. It wasn't on my list. A lot of us didn't even know it was still publicly traded. We thought it went poof by now. You know? So that's what I'm saying here. Another name that they came in, and again, the point I was making is they're bombing April calls. Like, if this was a couple of if this was a month or two ago, all kidding aside, a month or two ago, this GoPro, I probably would have added double of what I got. No bullshit. And I wouldn't even be looking at it to sell. I wouldn't even be looking at it to sell. Even up where it is right now, percentage-wise, it wouldn't be a consideration if this was a month or two ago. But because now I'm kind of taking a more tactical approach, you know, I'm forcing myself to hang in there. Here's another one that's caught some real nice action. April's, again, so with time. SGHC. Now, this one, I sold some, like I told you, STEAMROOM members, and I held some. Okay? Because, again, I don't want to just start buying and holding on to everything again. That defeats the purpose of what I'm trying to do. But this one, it came in, same thing. April, I think it was 4 straight days. 4 straight days of April buying in this thing. You know, decent size, too. good looking action. Now, I don't know the reasons why. I mean, a couple people in the steam room have shared some thoughts, but it's a good looking stock. Good looking flow. But again, the thing to remember is April. Okay, so after the initial momentum, it certainly can digest. If they were looking for a quick speculative move, in my opinion, they would have come in closer, and the flow would have looked a lot more speculative. Like even GoPro, you know what they did? Let me show you the GoPro, so you know, especially those of you in the steam room. Right? And if you're in the steam room, it doesn't matter because you're reading my commentary. If you're not reading my commentary and you're in the steam room, I don't know why you're in the steam room. Right? But okay, I'm not hands down the top action on everything I see, right? That's the top action on the day. That's the best action out of all the action we're seeing. Okay? But look at what they did here. What are they buying? The stock was trading at $1.70. So this was the second round of buying after I bought it. 18,000 April dollar calls. Okay? They're not going out buying the $3 calls for 10 cents. They're not even buying the $2 calls and taking the cheaper route. What are they doing? They're going deep in the money. They're probably buying the living shit out of the equity, and now they want to utilize the leverage in the option market. All right? But in my opinion, that's what I call quote-unquote real buying, right? Not speculative buying. Like you see, there's other lines of speculation here. Here, September $2 call, September $1.50, April $2 call here, catching a little action. Right? You got other lines of action, but this line, and especially volume-wise, that was the tell. Right? Look, here's more. GoPro, Bulls Press, April dollar calls. See, I mentioned I added the GoPro there. Yeah, I think this is the line that I just showed you. Here. Is this more here? Or this could all be the same action that day. It could be. It was a ton of action. But I'm looking for the first round of buying here. Oh, here it is. Here it is. So this was speculative buyers tailing the big guy. Here it is. This was the first round of buying in GoPro. 40,000 April $2 calls. 40,000. Look, that's where I bought it. $1.35, $1.38. Okay. Again, you see that type of action, and look at this, 30,000 in a sweep here. All right. So that type of action, I want to continue to play while the rest of positioning shakes out, right? And that's the new risk I'm willing to put on currently. Okay. And then again, I get questions about the TNA. Guys, I'm being dead honest with you. I don't have no secret sauce when it comes to selling. I promise. I wish I did. I have no clue, just like everybody else. The only things that I've learned over the course of my career when it comes to selling, if you're in options and you see in the flow, what do? They roll, right? Every time a stock makes a move, right? They want to stay in the name. They roll up, they roll out for more time. They take some money and put it in their pocket, right? Each and every time a stock moves higher and they have a size position in, very rarely do they come out all in one shot. They roll the position, they take some money off the table, pay themselves, and put some back in with more time, right? And they continue to do that. That's the quote-unquote smart money approach in options to selling. Now, I'll be honest with you. For me, that's easier said than done. One, I'm primarily an equity player. But two, even when I play options, I've tried that, and I just don't have the discipline. Because you know what the problem is no matter what, that last batch when you're rolling, you're willing to give up a loss. That's ultimately what you're willing to do. To catch that big trend, you're willing to risk some money. Where me, a lot of times I feel a lot more comfortable with just taking my profit if it's a nice profit. Right? If that's what I was looking for. Okay, so that's options. Now for equity players like myself, I like to play equity a lot, especially smaller names. The smartest thing to do if you like a name longer term, you own equity, you sell a chunk, leave a little piece of equity, or even better sometimes, you sell the equity and then take some of those profits and put it in calls with time. I did that with Riot. You know? So those are the only, and again, it's not any secret sauce. You know what I mean? You're going to get frustrated. There are going to be times where you roll and it doesn't come out the way you would like. You would have rather take the whole profit. You know? You're never going to get out at the tippy top every time. It's impossible. So you got to get, the only thing that I've learned to satisfy myself psychologically as well is before, like when I put on the trade, I have an idea of what I'm looking for with a plan, and then I put that plan into action, right? So like TNA, okay, I had a real nice position in TNA, okay? That's not something I want to hold over a lengthy period of time. I don't want to hold big size of a levered ETF longer term for obvious reasons, right? But when I like something and I think I could catch a move even shorter term, I like to start with the levered ETF for leverage, right? So now TNA, what I've done already once, and I'm probably going to do again tomorrow, is I'm selling TNA and I'm taking some of that money and I'm buying IWM calls with time. Okay? So last week I sold a piece of TNA and I bought IWM March 235s, I think they were. Yeah, IWM March 235s. Now tomorrow, I might not buy the March 235s. I might buy something else, different strike. But my goal is to still have IWM exposure longer term while I'm taking some profits off the table. All right. So that's kind of my game plan. You guys remember, right? When I put the trade on, when IWM gets up in this neck of the woods and tests highs, that's when I was going to start to do that. So that's what I'm doing. There's no, there's nothing else besides that. I still like IWM. I still like small caps longer term. You guys know that. I want to be in the trade, but at the same time, I want to be smart about it, right? I want to lock in some profits. And if we do get a pullback, I'm going to put on small cap exposure off that pullback. Yeah, well, the rolling heel, there's nothing better if you want, like that's why we see sweepers do it constantly. That's where they pick up the money, like here. And you know this name because you made big money with it, Sahil, a net. Okay? They bought a net here, November calls, right? Sahil, I think you played the same action as them, if I remember correctly. Okay? Now, a net broke out. They rolled those calls. A net gapped up again. They rolled those calls. And then the net broke out again, and they rolled those calls. The only way to catch a move like this, realistically, while taking off some of the risk, in a prudent way, is by doing it that way. That's where they pick up the money. Now, eventually, there's going to be a point where a net is going to top out and go into digestion. And what they do with that last remaining piece, the piece they got caught with, a lot of times, if the correction is deeper, they'll roll down strikes. So what they'll do is if they're too far out of the money, they'll roll down to come for that higher delta. They'll adjust accordingly if they still like the name. But, they'll continue rolling. The more this thing continues to go higher, they keep rolling. They just keep rolling. That's how they pick up all the money. You know, but you do that with names you like longer term. You know what I mean? You do that with names that you're betting on the name. It's not a trade. You're betting on the name. In my opinion, when you roll like that many times. But, you know, that's the story, guys. You know, that's the story. I mean, does anybody have any questions about any of this at all? Well, so Jesus, could you talk Reddit that things keep? Yeah, I mean, these are the type of names I really, you know, I haven't fooled around with at all. You know, these things have just been explosive off. These are like earnings. They get the gap and go, you know? So, like here, you had this. So you had to either be in before earnings. Like before earnings, you had a nice setup here, right? Almost similar to the Annette. But you had to be in it before earnings to get the rest of this move here, unless you chased. And even if you chased, you got rewarded like some of the others out there, most of the others. Okay. But here at this point, to be honest, like I don't have any opinion here. You know what I mean? I have no interest in it. This is gone, right? If you're in it, you're making like pat yourself on the back, make sure you lock in some profit, you know, roll, leave some if you like it longer term, but you know, you kind of got what you were looking for, in my opinion. You're right. Take credit. I wouldn't personally like up here, and I get what some technicians may be looking at. You got kind of a breakout to new highs. The problem for me would be you're up significantly here from this, right? This is a big move. So I think there's a higher probability of some digestion coming at some point, at the least. But this has been a great name on Flyer. Yeah, the China names, I still like them. I think they're in this rotation bucket. So days like today, where the market looks healthier and you kind of get these small caps, cyclicals, materials, and China. They move with the healthy part of the market now. So, you know, again, a lot of this stuff has had big moves now here over the last couple of weeks, but I think they still buy pullbacks in this stuff. You know, I think they still buy pullback. And you got, again, they're China stuff, so they're all, you know, you're always going to get this kind of wonkiness, but like names like this, I like. GDS. You know, obviously Baba is like the stud of the China stuff, you know. Even Baidu's playing a little catch up. That's been a big laggard. But some of the more speculative stuff is kind of like, I like this one, GDS, VNet, which hasn't really gone anywhere too far. Yeah. Yeah, Pony can get hot. I traded that Pony a couple times. Pony can get hot. You know? But like, see this GDS? Like, this is, again, if you believe the China numbers, so that's a big if. But these are real names. Like, these aren't, you know, that speculative. Like, GDS is a big AI player. Like, institutional backing. Like, funds own this name. VNet, if you look at like the AI umbrella, you know, like they show like some of the companies, the makeup of that AI trade. Baba is on the top there. VNet is right up there with it. Now, it's a $9 stock here. It's an ADR. That's why it's so cheap. But, you know, this is a big player in that AI arena. GoTo's more speculative. GoTo, I think, is a China online education name. That's really speculative. You know, this is spec. Like that, this is, you want to live dangerously, you're buying GoTo. See, that's the problem. Like Chinese stocks in general, I think I wouldn't go nuts. I wouldn't buy equity, me personally, and that's why I really haven't participated much. The only China stuff that I played was yin, the levered ETF. The reason being is I do not feel comfortable owning equity in Chinese stock. One, and if you're going to buy calls, I would recommend you put in what you're willing to lose premium wise. Yeah. There's a lot of risk, Charlie. I wouldn't, I'd be really careful. I get it if you like China as a rotation play, but I wouldn't go nuts. I would not go nuts. And again, I would try to stick to buying pullbacks and not chasing, because you chase them, you could get your head chopped off as well. But they look good. Like here, even the ETFs, ASHR, look at this rip. Crazy. Crazy moves. So like many things right now, right, this is that rotation bucket, but still look, right, they've had big moves here. Big moves. So you got to be careful. You got to be careful. What else you got going on here? Yeah, PDD. Same thing. PDD has been hot. That's Temu, right? So it had that tariff risk to it. But it's more the AI names and Baba that have been carrying on. What's another name? These guys catch some action. Tiger, the brokerage firms, Futu, they catch a lot of flow. Billy. Oh, you know what? China name they bombarded this week? JD. Somebody bought the living daylights out of JD. Jan calls. You want to see crazy? I should have bought JD. I didn't buy it. I should have bought it. Even for a trade. Look, a whopping 136,000 Jan 40 calls. That was the second day. What was the first day? Look, JD absolutely tattooed this week. Wait till you see this. Look, another 72,000. 72,000. Here was the initial buy. Hold on. Yeah. 96,000 Jan 40s. The stock was 32 and change. Non-stop buying all day long. Here, this was in the middle of the day there. So here, this was their average cost, $1.26 on almost 50,000 of them. So like you see this type of flow. This is kind of this is what I'm looking for. Because like personally, I'm not handicapping. I'm not buying stuff based off anything else. So ideally, this is the type of aggressive buying I'm looking for. Because I know if I just buy that type of action and I stick to just that type of action, I'm going to knock the cover off the ball. The problem is if you just stick to that type of action, there are going to be times where you're not playing much of anything. But your hit rate is going to be significantly higher than anything else. But yeah, so JD this week they tattooed. Oh, and here I'm showing you this. Right? We haven't been seeing this in ages. Small cap flow. Small caps, we're seeing nothing but outflows. Nothing but outflows. So again, think back, right? You had IWM starting to firm up, look better. Individual names in small caps were looking better. And then you look at positioning and nobody's there. Not only are they not there, they're short. They're short. You still hear it every day, every week. I have CNBC and Bloomberg in the background, and every day I'm hearing, Yeah, I don't like small caps. I would stick with large caps. I'm short small caps. I would short small caps nonstop. Maybe in recent days now, you're starting to hear a little more bullish tone for small caps now that the price action's firmed up. But nobody there, nobody. So you get a setup where everybody's short for obvious reasons, and now there are reasons to not only cover that short but to get long. Woo-hoo-hoo. Whoa, boy. Katie, bar the door. Katie, bar the door. And that's why, we haven't seen it. All we've seen so far is some unwind of that short exposure. That's all we've seen so far. That's why big picture wise, I'm still really bullish small caps. What else? Anybody else got anything interesting going on? Yeah, I see a couple open guys. I don't open. It's not that I don't play it when you got all of everybody on social media playing open, and you guys know me. I don't anything the crowd is involved in, whether it's going higher or not. I stay away. I just don't fool around with that. There's so many other names out there. I don't need to be a part of open. Now you can't leave small caps. I like that. A little Bronx tale, Charlie. Oh, no. TSL I sold last week. Oh, I forgot to mention that, right? Oh, I think I mentioned it on Thursday, last week. And Sunday, obviously, for members. But yeah, TSLL I sold last week. I netted $3 exactly. So I'm out of that. And again, that freed up a nice amount of money, because I had a nice position in it. So yeah, it was you know me, you know what I mean? That's not really my type of name to get involved in, period. Let's be honest. If TSLL don't exist, I'm not in the trade, right? But when $2 names and $3 names are staring me in the face, it's tough for me to look at any of the big guys. But it looks really good, right? It looks good. Yeah, especially off that spot, Sahil. Like this spot was it was worth a shot no matter what, I think, right? Yeah, we talked about it. Like you kind of had this breakout potential, right? And all you need is some decent sweeper activity to show up to kind of confirm that real buying was going to show up behind it. It's just a tug of war type name. Yeah, I think honestly, it heads higher. The only thing, it's very possible that this continues a bit, but you don't mind that. You're in a roll and you're in longer term, right? If I'm not mistaken. Oh, you got leaps. Oh, you got equity too? Jesus. Wow, you got equity too. Jesus Christ. $368. But yeah, I mean it looks I don't see too much out there that looks bad right now. I'm not gonna lie to you. I don't the stuff that looks bad is stuff that's overextended. There's a lot of good looking stuff out there. I think just things look too good. Things are just some things are up too much. Oh, I got sun going right in my eyes here. Like I was looking at this name too, Corning. This was kind of a sleeper AI play. Look at the move in this. I was looking at it today. Look at this. I like that name too. That's a nice rotation name. Home Depot. I like that name. Oh yeah. Oh yeah. This is, what Home Depot reminds me of, Patrick? It reminds me of Costco. It reminds me here. Costco here. See Costco here? And now Home Depot. Oh, what the? And now you got Home Depot coming out of this choppy long base here. It's a $420 stock. Yeah, so I'm sure you're buying some calls, right? Or maybe not. See, for me, guys, the $400 stock, I gave you the example before, right? For me to buy the equity at $400, okay, percentage-wise, that's how you got to look at it. All right. What am I like? 10% on Home Depot is a $40 move from here. Where you're seeing $3, $4, $5, $8, $10 stocks. You're seeing 30% in 5 minutes. You know what I mean? So it just doesn't make a whole lot of sense for me to get too involved in this stuff. For my style. Now, again, you could say buy the calls, right? And sure, I could buy the calls. But even then, I can make the rebuttal. Like, all right, how much are the calls in Home Depot, right? Not only, so now I got about Home Depot, I got to predict the time it's going to move. I mean, buying calls is not easy. You know what I mean? Like, we used to call it crystal ball trading. You got to figure out not only is the stock going higher, when it's going to go higher by. And then you got to get out when it's going higher, because if it goes lower, they're going to take all that premium from you, right? So, again, if I'm comparing it to what I feel most comfortable doing on a risk reward, do I want to buy Home Depot calls and spend, anything high delta, $10, $15 in premium? Or would I rather buy a $10, $15 stock that is getting swept up? Right? Where I can manage my risk a lot better. So that, again, for where I'm at, you understand? I understand some of you are a lot more aggressive. You're a lot younger in the career. But for where I'm at, it doesn't make a whole lot of sense to do a lot of it. It's okay to do some of it. It just doesn't make a whole lot of sense to do a lot. I'm not going to make a dent buying a name like this, me personally. You know what I mean? I'm not going to size up in a name like a Home Depot as I would size up in, any of the other stuff I played here recently. So that's the point I'm trying to make. There's a lot more risk involved, undoubtedly. Yeah, undoubtedly. So what else? Anybody else got any more questions before we pull the plug here? All right. So the name of the game again. Next week we didn't even talk. Next week we got options expiration and the Fed, and we're already seeing. When I tell you, let me tell you for a second. I know STEAMROOM members are probably tired of hearing it today. The amount of rolling yesterday and today, I can't even wrap my head around it. It broke my trade alert. For the last hour of the day, I couldn't even get slow because of all the rolling that came in the final hour. It jammed up trade alert. That's how much rolling was coming in. Now, usually we see it really start to pick up the week of OPEC, which is next week. But I think because the Fed is right smack in the middle, they started late this week. So the point I'm making here is the flow is going to be really, really messy. It already is. There's rolling all over the place. And, next week you got actual OPEC week and you got the Fed on Wednesday. Yeah, listen, of course there is. Of course. No, of course there is. We'll put it this way. A couple things can happen. If you get kind of a continuation of what we're seeing here, okay, into the Fed, you certainly can have a sell the news. You certainly could have a sell the news. But Stacy, here's the problem of why you can't really get a material sell-off, okay? You already got liquidity. I mean, as robust as it's been since COVID. Realistically, you got financial conditions as easy as they're going to be, as loose as they're going to be, okay? And now you got the Fed that might be starting a rate cut cycle. It's really difficult to get a market to sell off, and you still got 3/4 of the market that benefits off rate cuts that nobody's involved in. Tough. It's tough. You get these kind of dips, right? But that's why they get bought up so quickly, right? I mean, what I thought you may see was a lot of these AI names, these big mega cap tech / AI names. If the Fed was going to cut, they rotate out of those names and into everything else, kind of what we were saying. But the rotation out is really not aggressive. Like you look, like even the names here, you have some of like Meta, like it's kind of flatlined here. So see, they're not selling them off, they're holding up. They're just not doing much. Microsoft, right? Netflix, Apple. Like if you're in these names, you're not making money. This one caught fire. Go. So you got like a mixed variety going on there. And that's what I think is actually holding up the indices that much more. Because if they were selling these names, they would be weighing on the indexes. But they're not. What about this? Like these are the moves that spook me. Like when I see this in the big names. This. Look at this. FTX. Micron. These are big names. You're talking about monster moves. WDC. Again, Andrew, I think it's what we've been talking about. They're taking some money out of that stuff and rotating into all the other stuff. So I don't think it's a topping signal. I think it's actually the opposite. Where I would be the most concerned with the price action was what we were seeing kind of yesterday and the day before, where you're getting these type of moves, Oracle, Avgo, you know what I mean? Like these type of moves in the bigger names, but the whole rest of the market is selling or not participating. But we're not seeing that. We're seeing some of these big names, some of these AI-related big names go nuts, but we're also seeing a bunch of names not doing anything. So, and that's what I think for Andrew, this to continue, I think this has to stay involved. In my opinion, this has to outperform. If you don't get equal weight outperforming S&P 500, I think that's where that's like kind of the sign of a correction coming. But if they keep rotating into this, how are you going to get the market to sell off? Right? How are you going to, you're talking about a lot of stock being bought. Home builders, materials. Like, did you see? Look at this. Look. Like nobody would have thought it. This is what led today. Basic materials, cyclicals, real estate, healthcare, financials, industrials. Look at that. Okay, here for the week. Materials, tech, real estate. You know what I mean? It's a weird setup, but You know, it is what it is. Gold, yeah, gold. So, you know, we talked about gold. I don't know. Gold, I'm a little nervous about gold because if you get kind of risk on macro, do they sell gold off? You know, but I don't know. I don't know. I really don't know. I wouldn't make that. I wouldn't bet on it. I'll tell you that much. But that's kind of what makes me a little bit nervous is that, like, if let's say you get rate cuts and now the macro picture starts to make people feel better, you get sentiment, consumer sentiment, that stuff improving. Usually that's bearish gold. But, you know, because of debt and everything else, I don't know. I don't know. You know, I don't know. I know, I mean, the gold miners have been unconscious. These names, woo. But again, that's another part of the market outperforming, right? Another pocket of the market, major outperformance. Look at this run. Just miners in general. Yeah, breadth, exactly. It's the breadth. That's the breadth. So, yeah, the market's telling us that days like today, and you see it in the price action, in the index, when you get this type of participation, this type of market action, you see a healthy market. When you see the opposite, kind of what we've been seeing for years, the market shows concern over that. You know, shows concern over it. But again, I think the moral of the story here, guys, because it's a lot of information. We don't want to make our heads spin here. It's the heel point. It's been a hell of a run, especially in names. Number one priority, you want to hang on to the bulk of it, okay? Even if it's not all of it, you want to risk some of it to make some more, that's fine. Number one priority, in my opinion, should be you want to hold on to the majority of it and, you know, be more selective to try to make some more money along the way if this continues. All right? And then whenever that correction shows up, whenever we're ready for a pullback or correction, you're going to have some ammo. Maybe you give back some, no big deal, but you have some ammo to take advantage of. Oh, yeah. They're always healthy. You know, even the little minor rinses are always healthy. These little dinky ring sell-offs. Like, you see these things? They buy you a little more time, you know? These little pullbacks. Look. But the problem with the little pullbacks, after you get this, you need another. You know? After you get this, you're going to need another. You know, they don't buy you too much time. Yeah, today was crazy. Today was crazy, Brentwood. All right, boys and girls. Hood, again, these names, man, I would say this. If you're in Hood, I wouldn't sell it. That's first and foremost. Okay? Hood, in my opinion, out of all the names, all the flow out there, I think the top flow, bullish-wise, has been in Hood over the past more than a year now. More than a year. You know? But, you know, at 118, do I think, you know, it continues higher before it digests and pull back? To me, that's a guessing game here. I don't know. You know, does some money rotate out of that? Do they take some profits and move elsewhere? There's certainly a shot of that. So I wouldn't buy it up here, but I definitely would hold on to it if you're in it. Yeah, definitely. Yep, struck. All right, boys and girls. I appreciate you spending some time with me again, talking some shop. Enjoy the rest of your week. We got a big week next week, so get some rest over the weekend. Yep, and I'll see you, Steam Room folks, mañana. Have a great night, everybody.